there is any actionable idea that has come in from the budget or not. Gautam Duggad of Motilal Oswal Financial Services joins us now. Gautam, always a pleasure speaking with you. You've been tracking the Nifty earnings very closely. Each component, tweak them, speak about valuations, etc. Was there anything in the budget that caused you to, tweak those estimates and perhaps come up with any actionable ideas, or is it still more of the same?
Hi Mangalam, thanks for having me here. No, absolutely. We didn't need to do any change to our earnings estimates, and that's never been the case actually for the last 4 or 5 years. Typically, budget doesn't make big changes to sectoral earnings. Budget is more a top-down sort of a policy statement. We don't even expect budget to change our earnings materially, unless there are cases where government had reduced the corporate tax rate 6-7 years back. That was when we needed to make big changes to our earnings. But otherwise, it's very peripheral. And given yesterday's budget, I don't think there is too much sector-level changes as far as Nifty is concerned. Of course, there are several sectors which have seen some initiatives and announcements, but that's more bottoms up rather than it leading to any meaningful changes in our earnings estimates for the benchmark indices.
Okay. Gautam, you said the budget was a missed opportunity to perk up the markets. What was the biggest disappointment for you? And if that FTT coming in, does that meaningfully change your view on, the outlook for exchanges, for brokers? Any revisions there?
So, look, there are two ways to look at it. We didn't have too much expectations on the budget to begin with, which is what we had published in our preview, which we did 2-3 weeks back for budget. You can just assume that instead of August or September, if the government had done the GST cut in the budget, perhaps the budget headline would have been very different. STT raise did come across as a sore point. Not that it's going to have any meaningful change. Of course, the market reacted in a different fashion yesterday to some of those broking stocks. From what we understand, it's going to have some impact on the futures volume, but options volumes are not going to see any meaningful change out there. Some of the future volume may shift to cash or more options. We'll have to see as we move forward. But the stocks, the way they've corrected, some of them have become quite attractive now. A couple of them are in our model portfolio. We're quite positive. We're very sanguine on the capital market themes in India, notwithstanding the near-term volatility that it will, entail, because the cyclical stocks and the sentiment in the capital market plays a huge role in the near-term stock price direction of some of these companies. But the story from a medium-term perspective remains extremely solid. Not just broking and exchanges, but even the other elements of the capital market ecosystem, which is the asset management companies, the wealth managers, the intermediaries, the depositories. So we have an overweight stance on that space in our model portfolio.
Right. There's one name to the game. It's called volatility. The Nifty is back in the green right now. The Sensex too is back in the green. After testing levels of sub 24,700, the Nifty is now back above 24,800, and all in a matter of last few minutes. The Nifty Bank, which was down 700 points just moments ago, is now down just 380 points. So that's how volatile this market has been. And we were pointing out that despite the decline that we saw, the India VIX was fairly contained. So that told you that the downside perhaps may have been limited. So now the market's tested the lower end of the range. Let's see whether the upper end of the range gets tested or not as well. The rupee weakening from today's high of 91.4 thereabouts. It's weakened further to around 91.7. Gautam, markets are mainly moved by earnings, and we're in the middle of the third quarter earnings season. What have you made of the numbers so far? How do they track versus your expectations? And any meaningful upgrade or downgrade that has come by?
So, Mangalam, look, for our coverage universe, out of 355 companies, about 189 companies have reported numbers. For those 189 companies, the numbers are bang in line. Earnings are up 14% versus expectation of 13%. And for the Nifty 31 companies which have reported so far, the earnings are up 7%, which is also in line with expectations. There are several sectors which have done well, auto, capital goods, the NBFC cohorts, metals, even retail for that matter, consumer staples at about 10-12% earnings growth, that are multi-quarter high numbers. So a lot of these things are getting ignored given the other extraneous considerations which the market is right now grappling with. I think once the budget is forgotten in 2-3 days, the focus will shift back towards corporate earnings and fundamentals, and which is where the picture is turning slightly brighter. In fact, the pace and intensity of the earnings downgrade has also come off, which is what we highlighted a month back in our note. Even this quarter, as we progress, we've seen only about 0.3, 0.4% kind of earnings cut. So the 15 to 17% earnings growth estimate that we have for FY27, and I'm sure skeptics will have arguments on that, and rightly so. But as of now, it is intact. We are still talking about a 16, 17% earnings growth for Nifty in FY27, which essentially makes Nifty now below 20p at 24,700, the level that you mentioned a couple of moments back. So I think valuations as far as large caps are concerned are now in a territory which one may not call screamingly cheap, but it's quite reasonable now. It's trading at a long period average, which is 20.5 times. We are now at 19.6 to 19.8 times. So marginally below 20p. So yeah, I mean, earnings are turning slightly better, which is what the expectation was. The second half of FY26 will have better numbers, given the low base, and some of the positive impacts of the steps that the government and RBI have taken in the last 9 months, which is the GST cut, rate cut, interest, income tax cut, all of that. So that is manifesting in the numbers right now. And we are quite constructive on earnings for FY27, as we expect even the credit growth to start picking up a little bit from where we are right now.
All right, we'll watch for all of those cues as the market, the budget noise drowns in the next 2-3 days. Gautam, thanks very much. Always a pleasure to have you on the show. We have to take a short break, but up next we're going to be joined by